Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global market reporter at Nasdaq, with daily insight on the Nasdaq 100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining us this Tuesday afternoon, we have Frederick, Managing Director of Trading and Derivatives at the Schwab Center for Financial Research, to discuss key items to watch as we have a big week on tap for Nasdaq 100 tech earnings. Randy, it's great to see you as always. Welcome back to Trade Talks. And not only do we have the Fed rate hike decision, we have GDP data coming out, but we have a very heavy week for tech earnings.
There's no question, Jill. Again, thanks. Great for having me back. But you're right. The Nasdaq 100. There are 31 stocks in the Nasdaq 100 that are scheduled to announce this week. A few of them have already done so. In fact, all the ones that have announced so far this week have beaten expectations. So that's a pretty substantial chunk. And as you said, we've got the Fed meeting on Wednesday. We got GDP on Thursday. And then I think another one that's important is the PCE on Friday, because that is the Fed's favorite inflation gauge. So all three of those have the potential to cause some volatility in the markets.
And Randy, what are your expectations for rate hikes? Sounds as if 75 basis points seems to be the consensus at this point.
I completely agree with the consensus in this case. There's only at one point about two and a half weeks ago, there was actually a possibility of a 1 full percentage point hike, and it was about a 60% probability, but that has come down substantially to just single digits, which means it won't happen. Historically, unless the probability of something happening in the Fed, either up or down, is greater than about 60%, it just doesn't happen. So the odds-on favorite, which is at 100%, is for a 75 basis point hike. Now that means, of course, if we get 1% or we get a 0.5% or less, which I can't imagine that could cause some volatility in the markets. But here's a fascinating fact. The last three rate hikes that we had in March, in May, and in June, the S&P 500 rose 2.2% on the day of the March rate hike, 3% on the day of the May rate hike, and 1.5% on the day of the June rate hike. And all three of those came in pretty much as expected. So I think there's frankly a pretty good possibility that if we get that 3/4 point hike, we could see a rally in equities, which I think everybody would like to see right now.
And when we think about the GDP print, right, of course, that is going to be the one that tells us if we're technically in a recession. Any thoughts in terms of how the market could react from there? Or is that bad news priced in, and now we have to start thinking about looking ahead beyond that?
Well, nobody knows for sure, of course. We do know that we had like a 1.6% decline in GDP in Q1. And some people, although not the NBER, but some people believe 2 consecutive quarters of negative GDP constitutes a recession. You know, I don't think it matters whether we're almost in a recession or just barely in a recession. We're essentially definitely in a growth downturn. The Atlanta Fed, which has a really bad track record, I want to bring this up because it's important. People look at that. They're predicting like a 1.5% decline in GDP. That is way below the consensus. In fact, the consensus has the bottom end at about 0 and the top end at around 0.5%. The Atlanta Fed's track record in the post-COVID era is that it's off by almost a full percentage point. And on its 12 years that it's existed, it's been off by almost 2 percentage points consistently. So not a very good track record. And it's a lot lower than reality. So I'm going to go with the consensus, which is showing about, I think the last time I checked, about 0.4%. So I think if we can get anywhere between about flat to a 0.5% GDP growth in Q2, I think the markets will be pretty happy with that. If it's below that, then yeah, we're probably going to see some volatility.
All right, Randy, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global market reporter at Nasdaq.
My pleasure.